I'm a Russian trader, and as you have probably guessed, what's left of my cryptocurrency portfolio is a banana, which I am currently eating. But that's not the point. So, let's be honest, this isn't the altcoin season that altcoin holders were accepting. Coins have been destroying this market for the past 3 or 4 years. It would seem impossible to do any worse. A month ago there was the most severe capitulation in the history of this market. A final nail in the coffin. What was missing was extra passengers voluntarily handing over their coins at the slightest rebound and never touching them again. What was missing? That's right, a Bitcoin bear market, where won't be any time for altcoins when, right? I'm a Russian trader and I want to apologize in advance for my pure English. That's... Oh, I'm sorry. My English is not very well. I'm just learning to speak English and this channel is my assistant. Why do many Russian traders believe the market will rise? In this video, we'll examine the arguments why I believe most bears who are currently predicting a Bitcoin crash and a bear market like the one in 2021 will be wrong. Let's look at the chart arguments. The BTC structure is indeed similar to 2021 and the this line is indeed occurring in a very similar fashion on the charts. However, at the same time, there are a number of factors that are 100% different from 2021. I am only presented them here and everyone will draw their own conclusions. First, central bank liquidity, quantitative easing and tightening. We're currently in the 18% range, where most global central banks have only just transitioned to quantitative easing in 2000. By contrast, this range continued for some time and was approaching a reversal. So what we see here is what 2022 was precisely the transition to tightening. Late 21, early 22, the beginning of tightening. We are here currently in the easing range. The next thing that matters is the Fed's balance sheet, the main player in this market. If the balance sheet is reduced, it means liquidity is being withdrawn from the system. The balance sheet is increased. This is the activation of the printing press, November 2021. This was the Fed's balance sheet range, where liquidity has been increasing for the past year and a half, meaning money was being printed aggressively, and a range of liquidity contraction was imminent, which were 7 over the past few years. What's happening now? The contraction was completed in November 2025 and in December the end of the balance sheet contraction was announced, with the next stage being an increase in the Fed's balance sheet. November 21 was an increase. A contraction was underway now. The next reason why the situation is so radically different, as I said, is dollar inflation. There is a wonderful chart on TradingView where inflation, as we see after that very increase, the record increase in liquidity as in 2021 was at around 7–8%. Now it's 3%. As the Fed says, this is their target range, meaning they don't even have a goal of keeping inflation at 0 or 1%. 3% is their goal. In our issue is the global business cycle. If the value is above 50, means the economy is growing very actively, which is extremely good for risk assets, as we saw in 2021. November 2021 was around 16. Conversely, if it below 50, it means everything is contracting and the economy is slowing. For the past few years, we have been in the range below 50, with worst the most favorably range for growth in risk assets. It hasn't been reaching it. Another interesting ratio that we'll also touch on, which provides some insight into the current state for the global economy, is the copper to gold ratio. It might seem like copper to gold has nothing to do with this, especially in terms of the ratio. It's simple. Gold is a safe haven asset which is in a state of uncertainty, as we have seen recently. We have seen growth and increased demand for gold, a counterweight to gold, and copper as an asset needed in production, used in industry. When the economy is actively expanding and developing, demand for copper rises and consequently the price. Gold isn't as interesting in whole range. That is, we see growth is the ratio. Copper is rising relative to gold. Recently, all growth phases for risk assets. As I said, we will also look at this on the chart now. Even before cryptocurrency, even when Bitcoin wasn't trading, there were always accompanied by growth in this ratio. So here's what's interesting. In this ratio, we are currently at minimum values, and in 2021 and in November we were at maximums. So obviously we're global but local heights, and now we are seeing lows. And our important indicators is the Russell 2000 index. What stage was the 2000 Russell index? In 2021, it was the price discovery phase, the growth of risk assets. What was reflected on this chart? Currently, for the Russell, there hasn't been any price discovery phase in the current cycle over the past 3 years. We are putting a positive spin on this. There is currently no social risk metric. We have looked at this one or channel many times using international channels. Activity numbers of new subscribers, views on Twitter for top projects, and one exchange. All of this is distilled into a single metric called social risk. In November 2021 year, this metric was at its maximum, meaning retail participants were showing maximum interest in the market. Now it's at its minimum. November 21 was the peak and now it's the bottom. Next up is gold and silver. Where were we in November 21? Gold is moving sideways after its rise and it's now at its maximum. Silver is the same. It's moving sideways after a significant rise. With a significant rise is currently continuing. Please, not that I am not expressing my subjective opinion now. We are looking at where the indicators are comparing when to the previous cycle. Bitcoin dominance is currently at its maximum in November 21 and at its minimum 14. Now it's in the 16 range. Similarly, others dominance is altcoins. Where is this indicator? Now it's near its minimum of 7% in November 2021. It's near its maximum of 18%. How can this be? If there is bear market now, like in 2021, why is everything so completely reversed in this market? Have you ever wondered the others to Bitcoin ratio? Altcoins are currently at 20% relative to BTC, down from 44% in November 2021. Ethereum is also relative to Bitcoin. In November 2021, the Ethereum to Bitcoin bull market was coming to an end after days of growth. Now this movement has only lasted 200 days. With reversal and new potential trend has only just formed. It's just the beginning and to 200 days of growth. On this channel, I will also discuss of metrics that indicated future cryptocurrency growth. I will also share my futures traders where with Russian guys and I market money. Therefore, I recommended subscribing to my Telegram channel where there's a lot of important information, and don't forget that I have a private group with all my signals as well as followers of Russian influencers in English. You can also connect it through the Telegram channel. Goodbye.